Good morning, ladies and gentlemen. So today we'll be rolling with no video. Let one of my buddies use my camera to shoot a wedding last night. So no camera today. Just want to make sure the sound's coming through okay, though. Can everybody hear me just fine? Good stuff. Alrighty then. Well, let's. I meant to change the title of the video. Not really focusing too much on Twitter and SBUX today, maybe a bit, but actually was going to jump on and say today that there was really no particular stock that is standing out for me this morning that I'm really itching to trade. It's possible that I'm just kind of missing it, and it might be out there somewhere. I'm just looking in all the wrong areas. That is possible. So today we'll just kind of kick off, kind of review some stocks, take a look at what's sort of moving this morning, and answer any questions you guys have. Let's go get your camera. So something I do want to talk on here is gold. This is SBUX gold. This is GOLD. Many of you guys know the stock's been moving up pretty nicely over the past month, 2 months, couple months. I did mention that there did look like there was a slight bearish divergence, and we should start seeing a little bit of a sell-off here on the stock, which seems like it's going to happen. We've been having the RSI, trending down a little bit while the price action's been trending up. So, just based off on this, we should see, and it's already starting. You can already see it, right? Starting to pull back. I've had this line on the chart there for quite some days. So we're starting to pull down here. RSI is kind of trending down. So, and also if you look at like GLD, the move's much more prominent and bigger. All right, we had another bearish divergence take place here with GLD, and we've seen this move down a little bit. So I think in the next couple days, we're going to see some more pulling back in the gold market a little bit, so keep that in mind. MYL we'll talk on. I like MYL was one that I was actually watching. This is like the only one that I considered like wanting to trade today. So this had an earnings, spikes up pretty big, selling off pretty big, decent volume on the day so far. So this was the one that I was going to pay attention to out of all. Right now it's trying to hold its initial gap candle here. This was the first gap candle, end of the gap candle. So right now at about 2085, that's what's trying to hold. If that breaks, then we're probably going to be heading down towards 2021 for a test of the low of this opening gap candle right here. If it breaks through that, there's a good chance we're going to see a gap fill down towards 1850. All right, so this was really the only one I was watching. Right now the selling pressure is pretty big. So really hard to say that this is going to be a long on the day. I wouldn't want to be longing it based on the way it's moving right now. So for me, probably going to remain short bias on the stock MYL for the day. Okay. CMG, they report earnings. I can't remember. Let me take a look at it. It's been, let's see. They reported earnings and it kind of ran this day. Yeah, I mean, this is something that you don't really trade. You more or less kind of invest in it. It's just the spread's so wicked. It's not something that's really fun to day trade. It's more buy and do like a daily hold on it or a swing for the day. But yeah, Chipotle. I mean, this thing's been trending for like a long time. I remember, what day was it? I think it was this one here, 550. Yeah. I think this was the last earnings. No, it wasn't. That's a lie because that was 2018. It was this one right here. This is the last time I traded Chipotle. It was on this earnings report when it went from 330 to 430. It moved like 100 points in a day. That was the last earnings report I traded on CMG. Long time ago. Since then, I don't think I've really traded it much. TRNX, that's that little sub penny stock that a lot of people have been following for the past 2 weeks. Today, it's already starting to spike today, but it's worth watching. That's decently worth watching today. for a long play. I still won't trade it myself. I'm not a human. Well, maybe I will. Actually, you never know. Maybe I will. But yeah, this is a long play setup. Just the formation of it is a long setup. That's why you're seeing this squeeze happen. Big spike up, drop down, low drop here, squeeze back up, stays above previous low, forms back to the high. So it's starting to move. This might have a move today. Again, for those of you that like to trade low price stocks, this might be worth you guys watching that. But I could get behind a possible play on TRNX today. I don't think it's great looking, but it's worth keeping an eye on. It's already topped out too, so it's like it already made its move up towards previous tops today. So again, there might not be much more movement from it. Yeah, I figure we probably get questions on SINT. So SINT is a 1 to 30 reverse split. This is a terrible stock. It is not what you want to invest in, so do not buy the stock and hold it. The stock will return back to levels of 10, 20 cents in the future. So again, not a buy and hold. This might have a move higher today. This is something that I would consider if you'd like to trade penny stocks, if you're looking for high volatility moves. This is something that is worth watching today because it went through a 1 to 30 reverse split. So therefore, the float is going to become smaller. There will be less shares available for those that would like to buy the stock. After they go through a 1 to 30 reverse split, the stock gets obviously overpriced. It goes from a few pennies all the way to 5. It was just a few pennies. So everybody that follows the stock will know that the stock is truly worth a few pennies. So they will most likely short the stock, which means they're going to have short sellers involved, which means that you could squeeze them up. So there's a possibility that this has a good move today. I'm probably not going to follow it nor trade it based on what we're seeing here. 21 SINT. Yeah. It's got about a 21 million share float, so it's not really low float right now, but it's like a medium float to me, medium to low float. You could see, you might be able to see some moves on this, and the only way that it's going to happen is if for some reason a bunch of people want to buy it, and then you have early short sellers jump in on this stock and try and short it, and they get squeezed. Netflix for a swing trade, terrible idea. If you wanted to buy Netflix for a swing trade, you should have been buying it a couple days ago. Now it's too late to buy. Don't do that. TWTR today, there is really no specific stock that I'm following to trade today. It's just kind of like a sit back, watch the market. If something cool happens and something good happens, then I'll jump in. But for right now, it's pretty much just sitting, observing, and watching for this Monday because there hasn't been really much that I thought looked great setting up. So it might just be like some small intraday scalp plays, if anything. Roku. It doesn't look terrible. Let's take a look at this. I mean, I could see a little pop on Roku, but I don't see Roku breaking over 113 right now. Roku would most likely hit up towards 113, see a pullback, and then set up for a breakout over previous highs. But right now, Roku's not in a setup to, usually, based on the way this looks, it's not in a setup to break over previous high. It would most likely push towards previous high, then fail. Tesla, if anything, I probably remain short bias on Tesla for the time being. Let's see. Well, let me rephrase that. Let's take a look. It does have a big gap to fill, so there is that. I will say this, that I would like to be long bias on Tesla for a bounce here soon. I just don't think it's ready yet. So am following Tesla long for a bounce, just not right now, too soon to be trying to long this bottom on Tesla. It's already starting to roll over, so I'm anticipating, let's see, this is earnings, 1 day, 2 day, 3 or 4. So give it another 3 or 4 days, and then we'll probably look at a potential bounce play because it's reached back to a nice structural system where the stock recently broke out from, right? If you do this. Right, stock broke out from that area. So this 220, down to really, in reality, it's really from this is the buy point on on Tesla. $220 to $210, you're starting to enter into the demand zone on Tesla. So within that zone, if you pick up some shares around, 215, 210, you'll probably end up green in 2 weeks. So that's what I'm following there in Tesla. I don't follow VWAP on daily charts. Anything like that, I don't pay attention to. But yeah, there's probably a short play. There is a short play most likely coming on Netflix on an intraday setup where it's going to have a relief day that pulls back after this long bounce. So yes, I would follow Netflix short before following it long bias over the next couple days. Yeah, someone did ask me about Disney earlier. Let's take a look at that. I don't really ever trade Disney. Disney's at previous highs. It could break through right now, but the likelihood that it does, it's pretty small. So I'd probably be more of a short or a seller on Disney at this current price, and then be a buyer back down at 143s, 143.50. Maybe a buyer there, but most likely going to see a pullback today, tomorrow, next couple days. Again, stocks usually don't break out on their first attempt, so this would be the first attempt at the previous high. More oftentimes than not, it won't break. Yeah, I'm already long on Starbucks. I've been long since the earnings day. It was a Friday. Yeah, I think the first trade for me on Starbucks was right here, over 97. Got long. Then added long here on this candle. And then sold up here and held 50 shares. So you can see my average for Starbucks is 97.36, which is right 97.36. Okay, so it's like right in the middle here. So that's my average right now on Starbucks. Right now it doesn't look too good. So we'll see. Got a big gap down. We'll see if we get continuation on this. It is what it is. If it comes down, it comes down. Yeah, so back to Disney. Oh, we already covered Disney. Excuse me. Yeah, BYND. I know a lot of people probably asking. Yep. So BYND. Again, I'm not a big fan of the stock. It's super annoying to trade. But anyways, so first things first. Let's make sure everybody understands what they're involved with. You're involved in trading a bubble. Yes, this is a bubble. It's been a bubble. The bubbles has gotten bigger. If you're talking to anybody in the trading world right now, and they're telling you that BYND is a great investment, definitely consider not talking to them anymore. If you're talking to anybody that's telling you that BYND is not a bubble, consider not talking to them about trading advice. So BYND is, in fact, a stock bubble. This is exactly how they perform. How high it's going to go, nobody knows. Not even analysts. Nobody has a clue how high it's going to go. It's sort of a stock where you can get a lot of return and there's a lot of risk involved. So it's, again, play at your own play at your own risk. Will I be trading it before earnings? No, I will not be trading it before earnings. Will I trade it after earnings? Possibly I'll trade it after earnings. Basically, the way I see it is this stock is probably going to be, I wouldn't know. I'd have to look at financials, but I would say the stock's probably going to come back down to about $100 in next 6 months. So I would be more of a long-term short on this, or maybe you could even call that short-term. But yeah, I'd be probably more of a long-term short on this. I still think we see some upside moves. We have an implied move. Well, we don't yet, but there's probably going to be a 40 to 50 point move on earnings for it, unless it does nothing. If it stays stagnant, it stays stagnant. But right now, we're probably going to see a $50 to a $60 move up and or down on their earnings report. So again, that's play at your own risk. I won't be trading it. I won't be investing in it. I'm sorry, but vegetarian burgers, again, the company's not. It's a ridiculous valuation. It's very similar to TLRY. Okay, very similar. Does anybody remember TLRY? Can we get a show of hands? Anybody remember the stock TLRY? All right. Yeah, one. There we go. Maybe there's a little delay in the YouTube stream. There always is. Yeah, so TLRY was similar, right? We can never say that a stock is exactly the same, because if you put up the stock chart of BYND and you put up a stock chart of TLRY, they're clearly going to look different. They both traded very different. One was the marijuana hype. This one is fake burger hype, okay? So, and I'm not saying their burgers are bad or anything. I'm just saying that these are not real beef burgers. They're basically artificially made into hamburgers. It maybe tastes like hamburgers, and that's fine. I have nothing against it. But again, I highly doubt that a vegetarian, and I know they do other things, right? They don't just do burgers. I'm sure they have some other things in line. I even read something about bacon. But for a company that just creates a plant-based vegetarian burger, I highly doubt the valuation of this company should be $240, let alone $300. Apple sells electronic phones and computers that every single person in the planet has in their pocket. Almost everybody you know, unless they're an Android user, has a small, well, arguably small these days, but a little rectangular phone inside their pocket. I don't know one person on this planet that carries a Beyond Meat hamburger patty or vegetarian burger patty in their pocket with them every single day. Yet this company is trading at a higher valuation than Apple. Of course, there's more that goes into that, like the amount of shares available on the open market and this and that. But again, think about that. So, yes, I truly feel BYND is a bubble. We're going to see it come crashing down eventually. Is it going to come down as hard as TLRY? Possibly, but probably not. Okay, bubbles all have a uniqueness to them. The faster they go up, the harder they come down. TLRY, it went up stronger and faster than BYND. TLRY was more of a straight shot up. This has been a straight shot up, pullback, straight shot up, so we're going to see it come down, and I would say that the likelihood we see BYND towards $100 is very likely. I had a price target of TLRY when it was $300. I might add a price target of $30 to $40 on TLRY. Today, TLRY trades at $42. When it was $300, I price targeted $30, $40, and that's where we're at now. And it might go lower, honestly, but again, same thing with BYND. I would price target BYND probably about $100 to $80. Basically, it's IPO pricing area. That's what I would target BYND. Oh yeah, market. Yep, yeah, guys. Markets again. The market's in a bubble too. I mean, everybody thinks that it's not, and that's the way that again this all works. Okay, nobody wants to believe the market or the stock market's a bubble, but it is. That's just the way the bubbles work. Nobody likes to admit it because you'd rather see it keep going. But truth be told, it's a bubble. And again, that's the way this works, right? You take the masses. Okay. You need the masses in the world to be uneducated and stupid in order to truly make money. I know that sounds ridiculous, but it's not. And I'm not going to get into politics, but politics plays a big role into that too. It's easier to keep people stupid, right, than it is to have them be extremely smart. The more stupid people are, the less they know, the easier it is to take advantage of them, okay? So again, if you have majority of the people in the world uneducated and stupid and don't know much about how the market works, then it's easier to take their money. So if you keep people from thinking that the market's in a bubble, then they will keep buying. If people keep buying, prices will continue to go higher. If prices continue to go higher, somebody is making more money. Make sense? Exactly. So, please, everybody, continue to buy up the market as much as you possibly want, because the more that you do, the more money Connor will make. Because I'm not buying. I'm not averaging up. I am just sitting and letting the market run its course. The higher it goes, the more my 401ks and the more my Roth IRAs and the more my IRAs grow. Okay? The more I buy, the more I average up my price into a higher market, which puts me at more risk when we do in fact go through our next economic downfall. By not buying up right now, I hold my average price, and when I just let the markets come down, then I'll buy more and average down my price while everybody else is selling to me. Again, you make more money when you keep majority of people stupid and uneducated. And that's the way the system works, unfortunately, okay? So, to those that don't think BYND is a bubble, it is a bubble, it will come crashing down. To those that don't think the market's a bubble, it is a bubble and it will come crashing down. Again, how long, when is always the $1 million question, but at least knowing it and trying to take advantage of it is the game plan. Okay? What about... Yep, yeah, TWTR had a really good point there. Most bubbles have one more big push to the upside. It's called a market melt-up or a stock melt-up, where it's the opposite of a sell-off or a panic sell. It's a panic buy. And everybody gets into a frenzy to buy, like they're going to miss out on the next move, when in reality they're buying right at the tippy top, and then they just get absolutely smoked. It's called a market melt-up. That's also the next scenario that I think we could see play out in the market, because we went through a really big correction and now we're not really in a zone to really, I don't think we're in a particular, stocks and charts. They just don't look like we're in the mood to go through a really big correction. It actually looks like we're going for a move higher. And we could go through a market melt-up where everyone goes, see, it's not going to happen. It's not going to go through a crash. We're going to keep going. And then everyone buys like crazy. And that gives the perfect amount of additional buying pressure into the market for the smarter people to sell out on, okay? Because you cannot just start selling shit tons of financial securities in the market without having an impact, okay? So what's the one way? If I had one, let's just, for sake of the video and having fun, let's say I had 1 trillion shares. I know, it's crazy, but think about it. If I had 1 trillion shares of the S&P 500, what would be, or what would be my best approach, okay? So now I'm thinking strategically. I'm like, I'm a big time player in the market. I have 1 trillion shares of the S&P 500. I know that's crazy to think, but let's just say I did, and I did. I got 1 trillion shares. What's my best approach to selling these 1 trillion shares onto the market without causing the most impact of the price action going down? How can I cause the least amount of impact on the price action by selling 1 trillion shares? Does anybody know? What would be your answer? And I have to go in the next couple minutes, so somebody start shooting out some answers, because I'd like to finish this little spiel. Yeah, you would sell in pieces. You would sell over several days. That's all correct. Yes. You would sell slowly. You can't sell all at once. You'd just crash it, right? You'd blow things up. So you'd sell over the course of a couple days, maybe a couple months. So now you guys are starting to see that big economic shifts aren't going to happen in 1-2 days like everybody wants. They gradually take place. But the one most important thing that you would need to cause the least amount of impact by selling 1 trillion shares is buyers. If nobody was buying and you tried to sell, you would dramatically cause an economic downfall, you would dramatically cause a big downfall in the share price of the S&P 500. But if everybody were buying up the market when you were selling, then you would have a very low impact, or so to speak, you'd have a much smaller impact on the price. So if the market goes through a panic buy, opposite of panic sell, panic buy, where everybody thinks the market's going to continue for forever and continue up, you will cause a massive frenzy of buying pressure into the market, the perfect time for anybody with a lot of shares to start selling out. A market melt-up, similar to a bubble that goes through its final last squeeze and then crashes. So, again, good little fun this morning. Had a great time, right? So, with that being said, everybody, guys, everybody take care. Have a great day. Hope you guys learned something new. I'm going to get back to our private group as of right now. But yeah, so again, markets, I think, again, I'm not a true believer of them being super strong. But many would oppose to that. So if anybody's interested in our private group, you haven't already stuck with us or joined with us, feel free to join us. I just posted a link right there in the chat that'll take you to our website. If you're interested, feel free. Don't feel any pressure. Regardless, we do it every day. It's fun. So anybody, take a look at that. And for the next people, I will see you guys tomorrow morning for another stream. Everybody, take care. Stay green.